Want my latest market insights? My latest report, Gold just had a 5 standard deviation move, is now available. Scan this QR code or click on the link in the description. Mama said there'd be days like this, and there are. Even with the dollar, by the way, coming back down from that 100.2, seemingly back into 99.4. It is still digesting. That's number one. And by the way, so is gold. And yes, they are still strategic. The precious metal space is going to be in play for a good long time. China and US governments both adding metals like silver and copper to their list of critical minerals for national security. This actually happened a few months ago and helped the silver squeeze. These are going to be in play for a while, and the internationalization and trade migration to settle out of US dollar and the petrodollar into RMB and gold is going to pick up this de-dollarization. There's no question. Jeffrey has been on this for 2 years, and this is really in play. So yes, I'm still very, very bullish commodities, not a question. But the timing is what I'm trying to focus on. So I did call for volatility in the precious metal space for October. It's still here. It's still basing. We could have a bounce, make a lower high, and then break through and then get some support later on, et cetera, et cetera. But for those who are in the precious metal space, you know that it can be volatile, but it does not interrupt the macro trend and tailwinds for higher commodity prices moving forward and lower dollar. Right now, I'm just timing this really, really well of this volatility in October. This is continuous contract, and we've come from 4,400 down to 4,000, and that's all. So I am also timing a pullback in the markets, and the market pullback, it doesn't mean it can't get bought and we go make new all-time highs. We still have lots and lots of folks positioned to buy the dip, both retail, end of year performance chasing, the shutdown resolution, if it comes anytime soon, as well as, again, fighting the Fed right now with an easing cycle post Powell, not to mention we've got settlement, quote unquote, with China and formalization, which didn't get us anywhere, but nonetheless, there's too many risks to consider. But their big point is that yes, we've got seasonality that can force a lot of, like I said, FOMO into year end. But November is no bueno. No bueno for November. And this is something that Jason from Volland warned about. This is something that I have warned about. I've got all kinds of, the markets are nervous for good reason. I gave you 10 top 10 reasons, plus another 5 for bonus. One of them was CTAs. CTAs have not picked up speed on the downside, which is good, by the way, because you don't want it fast and furious. We've already had enough selling. Underneath the surface has picked up the breadth destruction. Remember my October 31st warning that we have too much breadth destruction. It opens up this air pocket of risk, my exact words in that post. And since then, you can see what's happened. So here was the October 30th. I'm on a 2-hour chart for the Qs. This is SPY. A market will open a little bit. I'm just kind of giving a quick overview of things. I said as the dollar starts to move higher, gave that post really well timed. As yields start to move higher post FOMC, pricing out rate cuts, and gold has already done its kind of identification of funding stress. Repo, I've written detailed post on this. Underneath the surface, cracks because of tightening liquidity, but more importantly, or in collaboration, falling collateral values. It's critical. Consumer lending space got annihilated. Wrote a post about that in September, end of September. So October into November has seen the consumer sector, I said consumer lending sector is in trouble, and the disposable income will feed into consumer spending slowdown. You can see it. So those stocks are just annihilated. Now, we also then, I warned, we're going to have a growth scare. So this is what we have right now. So you can see this gap has not been filled in the Qs, and we had a nice little pop, but not enough to fill the gap. And then I warned 100 point down. We got it with SPX. I meant 100 points, and we got it. So now I'm looking for double or nothing. So you know my levels for SPX, and you can see this morning, even in Qs and SPY, that yes, we are heading lower. So this is working really well. Lower high, lower low. Couldn't even hold 613. We're already down to 608. I've given specific targets for those who push the buttons themselves. So this is it. You've got other reasons besides the 15 that I gave you here. We had challenger jobs come in and very, very weak. We don't have jobless claims or non-farm payrolls, but at least we have some other external resources. And the market said, what? October job cuts totaled 153,000. That's up 183% from September and 175% year over year. Yeah, government is laying folks off, shut down, furloughs turn into firings. It was the highest level for any October because we're in a government shutdown. And remember, for every one government employee, there are 3 government contractors that are associated with those projects. And those gals and guys are off without any recourse. At least usually the furloughed government employees will get back pay. They'll be reinstated. If they're reinstated, they'll get back pay when the government opens back up again. And it's been the longest government shutdown. Warned, this Trump guy is not afraid of government shutdowns. That was an early post. I fully expected a government shutdown. Alexander has been posting in his channel this play that is still not resolved. Even if Republicans got a beat down in the Tuesday election and Trump is all of a sudden looking at the polls and his favorability has dropped like a rock, and the Dems gained a lot of power from that Tuesday. Point is, he's trying to now get the government to start back up. We'll see, because the whole purpose was this power of the purse and getting rid of the loyalist Dems that were on the payroll for the US government, and he said so. So the firings would start. This is a regime change. So this is going to be disruptive to the employment picture, which is my main focus as it relates to recession into all-time highs and the K-shaped economy, which I hope to God you have read about this. We've got some massive concentration risk, of course, in the US equity market, but we also have a lot of Main Street already in recession. Sectors, pockets are hurting even before the SNAP benefits and the health insurance premiums and all that increase from the shutdown. Before that. So that has been my big focus, and I had written about it, as you know, talked about it, recession into all-time highs. That's what we've got. And the job cuts are basically just supporting evidence that we have a further K-shaped economy. And now they have to kind of reprice or re-rate some of that risk and take it down a little bit, especially after Jensen type comments, who commented, NVIDIA CEO, who said strongly, China has pulled ahead. They will win the AI race with the US. And this is also something I've been writing about since literally January. Big detailed post. This is the Manhattan Project 2.0. You can find it over in Canvas. Just search up here. You get the idea. And then, of course, yesterday, Sam Altman, CFO, comes out and says, we may need US taxpayers to guarantee our debt. Oh my God. Microsoft has already been embarrassed enough because they own 37% or something. Anyway, the point is, it's not going to happen. It should never happen. It's more of that privatizing profits and socializing losses. It's basically created a mini growth scare. So the mini growth scare is also representative in that growth value ratio that I have shown you every single day. And I also posted it here. So this is growth, NVIDIA, yeehaw, and 200. I said, be careful. That's my upside target for NVIDIA. Since then, has come back down. Earnings are on the 19th. Folks are getting a little bit more wobbly. You'll see a Wall Street analyst say, hey, we don't need China. But the reality is Jensen says, yes, we do. So we get back inside 230. We'll have some more drama. You also see the dollar yen starting to roll over. And I said, be careful. As this follows through lower, it will create more bid to short the NASDAQ. And then this is just a little update, that consumer lending watch list that I put together at the end of September. This doesn't even track those. It's been phenomenal. UPST. Jeffrey's up 170% year to date in his portfolio. And you know, it's mostly macro. It's also lots of China, but mostly these shorts that had no business being up here. SoFi continues lower. Affirm right now announced earnings this morning. It's a short, the rip. Carvana is down down a nice decent amount. We'll play these until they stop. Anyway, the point is you got a whole bunch to choose from here. Oracle finally hit price target. It was very clear for me, not if, just when. So you've got T-Mobile, again, recommended short, working, Carvana, working, RCL, working, UPST, Jeffries, working, SoFi, just starting. It dumped 10% yesterday. So that's a post earnings. I identified another one, Hood, that also triggered yesterday. Microsoft has been straight down. AMD is now triggering a rollover with a weekly evening star reversal. Nvidia tagged perfectly, 187.47 with 184 overshoot next. Palantir, it's not just Burry, it's time. You got a whole bunch of stuff here. So I wanted to update with my price targets in the Qs, SPX, SPY. Celsius yesterday was a great chase. If you took it, I said it's going down into 42.87. It literally yesterday hit 42.88. Isn't that cute? So anyway, software, not safe, rolling over. Korea did a big halt the other day, and I said that this is going to work down into 92. It's working. Arista, I gave a very specific target, and it got tagged yesterday as well. Refiners are still perfectly fine. Solar is perfectly fine. EVs are starting to look really good. Anyway, you've got my growth value ratio. You've got my themes that I have been very strong on and detailed, whether it be the repo risk or the consumer lending sector risk. You've got trading room summaries of all the stuff that I talk about and the recording. Market's getting nervous. It's still nervous. Nothing has changed.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.